The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the corn market held on to a little bit of green on Thursday's trade. We also found some green in soybeans and wheat. So an okay close to the day that was kind of mixed. A little bit of triple-digit pressure in cattle futures, mixed action in hogs, quiet outside markets. Overall, not a lot of fresh news again as we work through Thursday's trade. Let's take a look at some things, though, and try to dissect this week's market action as we have a conversation with Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to talk with you again this week. And, I mentioned kind of a quiet day Thursday. We found some green in the grains and oil seeds. I think where I might want to start today, though, it's been interesting. We've had these trade deal framework announcements, this big one with Japan, Indonesia, the Philippines, rumors of the European Union, things of that nature, yet the markets just don't seem to be reacting to any of this news here, Brian.
Not so much the commodity markets. The stock market had a good $500 or 500-point pop in the Dow yesterday, S&P into new highs. So the vote in the equities market is this is probably positive, and well, it is positive, and so the vote is there. As far as how this all filters back to agriculture and ag commodities and export sales, that remains to be seen. So from a day-to-day perspective, I think you've got some different priorities. One is weather. This is just the most critical zone of the year for crop production and weather. Two, what's the export market doing? What is the dollar doing? And then three, you've got some really kind of perceptive markets. Now, when I say perceptive, like cattle, bullish market, tight supply. The perception is demand remains good, supply remains tight with grains. The perception is bigger inventories, some back and forth in the futures, fund money generally staying short the market, and that'll probably be confirmed tomorrow. So perceptively, there isn't a lot to sink your teeth into. From a change perspective, farmer selling is what it is. They got to move the old crop. They're not interested in selling new crop. So things are relatively quiet. And if you think about in your business, when you have a lot of, let's say, news in the world markets move. Tell me some headline news for agriculture in the world in the last few days. It's been pretty slim other than trade deals. So the commodities seem to be more of a wait and see attitude on the trade deals. Probably a nice firming tone. There might be those who would argue, look, corn's at 420. A week ago was at 407. Good weather. It should theoretically be under $4 by now, and it held. So maybe the bulls are going to have a small victory here.
Well, great points. I think about this in terms of this trade news and more, and this kind of ties in with the export sales we saw Thursday morning. It was initially announced by USDA that China bought corn,
right,
and then they corrected and retracted that. It was actually South Korea. But, one has to wonder, could a deal with China or a deal with India, something of that nature, be a catalyst to give us some momentum in these grain markets, Brian?
Well, the market's waiting for a signal, and I think we all saw this morning and went, oh, there's the signal. China's in. Trump was on television yesterday, President Trump, saying that things are going well with China. He likes President Xi. They're close. They're talking. And then you hear a corn sale and go, well, there's a symbolic symbol, and then there wasn't. So it's still a corn sale. We'll take it for now, but the big picture perspective is still a little bit more concerning, that the overriding view of the marketplace is still what is yield going to look like. And we'll get the Pro Farmer Tour in about 3 weeks. So that'll give us our real first boots on the ground. We will have a USDA report here in August as well. But that'll probably have limitations as to what actually is in the field. So perceptively, and I keep using that word, there just isn't much for bulls or bears that's new. We know there's a crop coming. We know there's some really hot, sticky type weather now. But then there's a forecast in the 6 to 10 day that puts the central core of the Midwest below normal in temperatures. So if you're really worried about prolonged heat, searing heat, those type of things, not in the forecast in either the rain or heat.
Well, and to your point, I mean, weather just looks really, really good in many areas. I know we've had a few spots of challenges, especially early in the year in the Eastern Corn Belt. I will say some farmers in north central Iowa may be thinking they're getting a little too wet here in the last 24 to 48 hours. I've seen a lot of reports of some heavy rain totals there, but it's one of those things, Brian, where it's pockets. It's not a widespread issue. And that's what continues to really, to your point, just drive this trade is the weather is just too good in the bulk of the Corn Belt right now.
Yeah, I've done this for 36 years, and I get a real feel for markets often on what isn't being said. Not what's being said or report, but what isn't being said, or when the phones are ringing and when they're not ringing. Farmers are moving out of the old crop. They've kept their gambling stocks for a weather event in June, July, August. They're moving it out. Um, as far as new crop, they're not really interested in selling much right now. Uh, and the mindset is, look, maybe I should be selling, but I just don't want to sell at this point here. It's still July. I'll take the risk and run. As an example, when I looked at other analogous years where the market had high crop ratings like this, prices did move lower than currently where they're at. Uh, but 2016, 2018 are analogous years. Uh, they bottomed in those 2 years, August, September. Last year bottomed in August. So time wise, we're probably seeing the mindset that when you have a big crop coming, the market's ahead of that, and we probably bottom sooner than later. Where I'm going with that, though, is the question that should really be. I get questioned all the time. Where do you think the bottom is? Well, I give you that number, but we should really see where do we think it's after that. And in 16, the market rallied 15%. In 2018, rallied 10%. And so you think about in 16, the market was down around 315. Well, it rallied 10%. It rallied a little over 30 cents, got back into the 350 zone. Same thing in 18, and then again last year. So that's why I don't think farmers are overly concerned. They know if it goes down, it'll probably come back. The question is, can it rally from here? And that's where I think the challenge is to get one of these three moving: wheat, corn, or beans. None of them have anything going for them right now. So that's the problem.
Well, you mentioned wheat too. I know we have the Wheat Quality Council Spring Wheat Tour going on this week across North Dakota and Minnesota, and it looks like day one and day two finding good yields, a little below last year, especially day two. Right. But there again, I mean, to your point, this wheat complex has been struggling along with corded soybeans, and still good expected spring wheat yields. Winter wheat harvest has been good. Again, it's just a lot of bearish weight in the wheat complex as well.
Yeah, there hasn't been any one event that weather-wise or other that has been really meaningful to the kind of the change in tone, whether it be a hot, dry spell or a derecho or something that the market looks at and goes, oh, this might be a bit of a game changer, just isn't there. August is a critical month for soybeans. So if you had to look at those three and say, well, which one might have the best potential, I would say soybeans. Uh, just they're hard to predict yield on, and it wasn't the best start. You'd mentioned pockets. That's true. Hearing too much rain in areas, some of these flat areas, beans don't like that much wet feet. Uh, so so are we kind of probing for a low in that market? I don't know. We need to see better export sales than what we saw today, 5.9 million on the old crop beans. The corn rebound at 25.3. New crop bean sales, though, 8.8. Nothing really stellar there. So it's got to come from somewhere else, and it's not happening in the weather market yet.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, is our guest analyst here today. Brian, let's go over to the livestock sector. Cattle futures a bit lower on Thursday. We did work off of some of the lows. And to me, I didn't see a lot of fresh news. It almost felt like it was some profit taking ahead of Friday's cattle on feed and July cattle inventory report. I mean, is that what you gathered? What are your thoughts on cattle today?
I thought they looked tired today. The board just looked tired. It didn't have any energy, and when it did try to come back, it lost it. So I think there's position scoring, hedge pressure, good hedging opportunities again, expectations that grilling season might be behind the market. There's not a holiday yet for some time before we get to Labor Day. So it just looked tired to me. It's a market that is just classic uptrend, a series of higher highs, higher lows on the price chart, daily price chart. That's what you'd expect. And it's looking to me like it might be trying to round off a top here. I'm not calling a top in the market. I'm just saying it looks a little tired. Again, another up week for cattle prices on the board. I do worry that at some point here, cash might start to just fall out. Those cutout values have been somewhat concerning to me that they've had it one direction. Cash prices are like almost trying to catch up. And at some point, there's a crossover here. That would concern me. So, as a producer, rather than trying to guess that and listen to people like me and say, well, where's the crossover? Get some puts in place, get a floor, rest easy at night, leave the top side open for right now. Maybe, Jesse, maybe the new norm, because of the strength in the back months, has been really outstanding. Maybe the new norm is $200 cattle now. Maybe that's where we're going to kind of see this pivot around, and if we get much below that, maybe the market holds. Maybe that is the new norm. I I've argued I don't see how we build demand in an uptrending market, but it it just behooves me that we continue to see what we've been seeing.
Well, I know export sales were pretty good Thursday for beef and for the pork side. And, something that I think is interesting too as we go through this seasonal demand kind of downswing, starting to hear more chatter in the mainstream media about the price of ground beef. I saw a report on the Today Show, for instance, here earlier this week. And you just wonder if some of that consumer confidence at retail could start to wane as you see a little more attention on the high prices at the meat counter. And could that be an added catalyst here into what may be a tired cattle market, Brian?
I think that's what has a lot of us somewhat, let's use the word befuddled, is we've been thinking that for a while, though, that the
Yeah.
consumer is just going to back away. And it just seems like those who are going to buy steaks and those who are going to afford it are going to go out and eat steaks and buy steaks. Case in point, uh, I was out with my wife and family. We went to a little place in the country, and they have a prime rib special, and $32. And the table next to us ordered, the table next to us ordered, the table next to us ordered. They didn't think about it twice. That they were having this is what their dinner out. So, and pretty soon they were out of prime rib. So, um, I think maybe it's just those who can afford it will keep at it for now at least, or then there's the flip side of this. Well, there's a lot of people who aren't going to take that vacation. They're getting their credit cards maxed, but I'm still going to eat out well once in a while. Maybe there's that too, but ultimately, it's almost like we talked about corn. You have spots of too wet. You have spots of maybe some of this pollination issue, but overall, you've got a good corn crop. Overall, we've got high beef prices that eventually take its toll on demand.
How about over in the dairy sector? I know you and I have talked. There's been some volatility there lately. What are you tracking with
Yeah,
dairy right now?
well, the milk production report, golly, you talk about a sock in the stomach. That had some big upward revisions. That was out on Friday. And so the market got kind of beat up early in the week right away, um, anticipating or factoring in some of these production increases, cow number increases, production per cow increases. So you kind of got the triple whammy there in revisions on so in July here, it's basically through June, and then the June report revised was basically through May. So you had upward revisions in May and June in both. And again, I think it continues to signal what I've concerned myself with in the dairy industry is not so much the dairy industry, it's the beef industry. So to get those calf revenues and beef revenues, you're going to continue to breed for beef and keep cows in the lactation cycle longer, and and maybe keep heifers on the fast track. Um, and historically, dairy producers they've had the kind of the mindset that to get ahead, you got to produce more. And if I can just outproduce my neighbors, then I'm winning, right? That type of mentality then adds a little fuel to the fire. Cheap grain and high beef prices, I think, have been responsible in part for that continued upward tick in the dairy production. And the demand market has not cycled in at these good values. But I think it's kind of like a hog farmer or dairy farmer or feedlot that sees a corn crop coming. They know it's cheap. They know they need to buy, but they don't have to buy. So you just buy as needed. And I think that's where the cheese processors are at right now as well.
Brian, always enjoy the conversation. Anything final, any risk management thoughts, anything you'd reiterate to producers here on the show this week?
Well, I think that the bottom line is coming into the last week now of August, the crop looks pretty good. Corn 74% good to excellent. I think if you're light or don't have any new crop sales, you might be in the mindset where my crop's good enough, maybe I can yield my way out of this low price. That might be the case, but I think if you haven't treated the market with a defensive posture, I would still do so. What I worry about is December corn. It's trading near 420, trading down to last year's low at 385. So talk to your advisor, get defensive posturing, fences, sell the carry in the market, go out to March, go out to July. There's good carry in the market. Work some kind of a strategy there. The bottom line is more acres, a higher rated crop than a year ago, and likelihood that the USD estimate is accurate or even low, given today's information. So that starts to build the argument for carry out back above 2 billion bushels. Again, no rush on the end user. So that's my message. Corn producers, even though I said prices go down to level and come back, there's no guarantee the comeback happens. So defend against another 30 to 50 cents lower. That's an ugly case scenario, but that's maybe realistic.
Brian, if folks want to reach out and have a conversation with you there at Total Farm Marketing, how can they get in touch with you?
I first ask for a phone call, Jesse, 800-334-9779. We'll start with a phone call and then ask for email, Brian with a Y at totalfarmmarketing.com. Or you can check out our website. Lots of great resources, lots of things to look at there, totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for joining us on the show. Have a great weekend, Brian. We'll talk to you next week.
My pleasure. Thank you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.